Is Colombia on the verge of igniting a global economic time bomb? Tensions are escalating, trade relations are fraying, and the world is watching closely. But is this really a trade war? Or something far worse? Colombia, a crucial player in Latin America, has long been a key trading partner with the United States. From oil to coffee, its exports fuel industries and markets worldwide. But recent developments have sent shockwaves through global commerce. The Biden administration has raised concerns over Colombia's trade policies, sparking fears of economic retaliation. Meanwhile, Bogotá is pushing back with new regulations, tariffs, and potential trade alliances that could reshape the balance of power. But how did we get here? The U.S. and Colombia have enjoyed strong trade relations for decades. The 2012 U.S.-Colombia Trade Promotion Agreement opened doors for billions in exports and imports, benefiting both economies. So why are things falling apart now? The answer lies in politics, protectionism, and power. Gustavo Petro, Colombia's leftist president, has challenged traditional economic policies, advocating for a shift away from U.S. dependence. His administration's reforms are setting off alarm bells in Washington. One major flashpoint is the energy sector. Colombia, rich in oil and coal, has seen U.S. companies profit from its natural resources for years. But Petro's aggressive push for renewable energy and reduced fossil fuel reliance threatens these American interests. Another battleground? Agriculture. The U.S. heavily relies on Colombian coffee, bananas, and flowers. But new Colombian policies favoring domestic producers could disrupt supply chains, leading to higher prices for American consumers. Colombia isn't just standing up to the U.S., it's actively seeking alternatives. Petro's government has been strengthening ties with China and Russia, two major economic rivals of the United States. Could this realignment signal a major shift in global trade dynamics? China, in particular, has been investing billions in Latin America, offering infrastructure projects and favorable trade deals. If Colombia shifts its economic focus eastward, it could accelerate a broader geopolitical divide between Washington and Beijing. Washington isn't taking this lightly. U.S. lawmakers are already discussing potential sanctions, trade restrictions, and even cutting financial aid to Colombia. The message is clear: defy us and there will be consequences. Yet Petro remains defiant. His administration argues that Colombia must diversify its economy and reduce dependency on American trade. This, he claims, is about economic sovereignty, not hostility. But is Colombia's economy strong enough to withstand U.S. pressure? The country is still recovering from economic turmoil caused by the pandemic, inflation, and social unrest. A trade war with the U.S. could trigger financial instability, job losses, and capital flight. And then there's the drug trade. The U.S.-Colombia relationship has long been shaped by the war on drugs. Billions have been spent combating cartels, with Colombia receiving significant U.S. funding. If relations sour further, will Colombia abandon anti-drug cooperation, worsening the global narcotics crisis? The impact of this trade war wouldn't just be felt in Colombia and the U.S. Latin America's economy is deeply interconnected. If Colombia pulls away from the U.S., other nations may follow suit, pushing the region toward alternative economic alliances. The European Union is watching closely, too. European companies rely on Colombia for raw materials, and instability in trade could send ripples across global supply chains, affecting prices and production worldwide. Global investors are also on edge. A volatile Colombian market could deter foreign investment, weakening not just the national economy, but shaking confidence in Latin America as a whole. Could this trigger an emerging market crisis? Financial markets hate uncertainty, and that's exactly what this trade conflict is generating. The Colombian peso is under pressure, and any signs of escalation could send its value tumbling, leading to inflation and economic distress for ordinary Colombians. So what happens next? Will Washington push harder, imposing sanctions or trade penalties? Or will Colombia double down, seeking alliances that shift the economic balance of power? One thing is certain: the stakes are high and the world is watching. If this trade war escalates, it could send shockwaves through global markets, impacting businesses, consumers, and economic stability far beyond Colombia's borders. But could all of this have been avoided? Some argue that diplomatic engagement, rather than economic aggression, is the key to preventing a full-scale fallout. However, with tensions at an all-time high, compromise seems increasingly unlikely. Colombia has choices: align with Washington and maintain the status quo, or embrace new economic allies and risk political and financial upheaval. Either way, the consequences will be felt for years to come. The U.S. too faces a dilemma. Does it pressure Colombia into submission, or does it adapt to the changing dynamics of Latin America? The wrong move could push an important ally straight into the arms of U.S. adversaries. What about the people caught in the middle? Ordinary Colombians could bear the brunt of this economic conflict. Rising costs, potential job losses, and economic uncertainty loom over the nation. The very people these policies claim to protect could end up suffering the most. And then there's the bigger question: could this trade war set off a domino effect? If other Latin American nations see Colombia successfully resisting U.S. influence, could they follow suit, leading to a regional economic rebellion? If Latin America shifts away from U.S. trade dominance, global supply chains could be thrown into chaos. The U.S. might find itself scrambling to secure resources from other nations, leading to price spikes and market instability. Energy markets could be particularly vulnerable. If Colombia restricts oil exports or redirects them to other buyers like China, global fuel prices could see unexpected fluctuations, hitting consumers worldwide. The geopolitical stakes are just as significant. If Colombia turns to China and Russia for economic partnerships, Washington could be facing not just an economic crisis, but a strategic challenge in its own backyard. And let's not forget the looming U.S. election. Political dynamics in Washington could determine how this conflict plays out. A new administration could take a different approach, or double down on economic pressure, intensifying the crisis. Colombia, for its part, is walking a tightrope. Playing too aggressively could backfire, leading to economic isolation and financial turmoil. But standing firm might also win Petro credibility among Latin American nations looking to assert their independence from U.S. influence. What's clear is that this isn't just about Colombia and the U.S. This trade war is a microcosm of a bigger battle, one that pits economic nationalism against globalization, regional autonomy against superpower influence. Will this trade war explode into a full-scale economic crisis? Or will diplomacy prevail before the damage becomes irreversible? The answer could shape the future of global trade for years to come. The clock is ticking, and the next moves made by Bogotá and Washington could determine whether we're facing a temporary trade dispute or the first domino in a global economic upheaval.